The Dow Jones Industrial Average plunged over 600 points today. The S&P 500 and the tech-heavy Nasdaq weren't spared either, both plummeting over 3%. The culprit? Former President Donald Trump back in the headlines with a vengeance. His weapon of choice? Tariffs. The very word sent shivers down Wall Street's spine, conjuring up memories of trade wars and economic uncertainty. This wasn't some abstract political posturing, this was a gut punch to the market, a real-time referendum on the potential fallout of Trump's policies. Investors, never ones for nostalgia when it comes to market turmoil, reacted with predictable swiftness, dumping stocks and heading for the exits. Trump's announcement was short on nuance but long on impact. He slapped tariffs on a wide range of goods imported from both China and the European Union. These weren't your run-of-the-mill levies either. We're talking about significant hikes, ranging from 15% to 25%, designed to protect American industries, or so the argument goes. The list of targeted goods reads like a shopping list for the modern world: electronics, machinery, agricultural products. This wasn't a surgical strike on a niche industry. This was a full-blown assault on the global supply chain, and the market wasn't about to ignore the shockwaves. China, the usual suspect in any trade war saga, found itself squarely in the crosshairs. The Trump administration, in its infinite wisdom, decided to target everything from smartphones to soybeans, slapping hefty tariffs on billions of dollars worth of Chinese imports. This wasn't the first time these two economic titans had squared off in a trade war. The memories of 2018 and 2019, when tit-for-tat tariffs roiled global markets, were still fresh in the minds of investors. It was a painful reminder that when elephants fight, it's the grass that gets trampled. But China wasn't alone in feeling the heat. The European Union, long a target of Trump's ire, also found itself on the receiving end of his protectionist policies. From German cars to French wines, a wide range of European exports to the United States were suddenly subject to higher tariffs. The transatlantic relationship, already strained by years of trade disputes and diplomatic tensions, took another hit. The EU, not one to back down from a fight, vowed to retaliate with tariffs of its own, raising the specter of a full-blown trade war across the Atlantic. Section 5. The Tech Tremors. The technology sector, a bellwether of the global economy, felt the tremors of Trump's trade war almost immediately. Apple, heavily reliant on Chinese manufacturing, saw its stock price tumble. Chipmakers, caught in the crossfire of the US-China tech rivalry, also took a beating. The message was clear: in an interconnected world, tariffs are a blunt instrument, capable of inflicting collateral damage far beyond their intended targets. The tech sector, highly sensitive to global supply chain disruptions, became the canary in the coal mine, signaling the potential for broader economic pain. Section 6. Investors run for cover. As the news of Trump's tariffs reverberated across trading desks, investors reacted with a mix of panic and resignation. The buy-the-dip mentality, so prevalent in recent years, seemed to evaporate overnight. This wasn't a buying opportunity, this was a time to cut losses and head for the exits. The flight to safety was on. Gold, that age-old haven in times of turmoil, saw its price surge. U.S. Treasury bonds, another safe haven asset, rallied as investors sought refuge from the storm. The message was clear: when in doubt, get out. Section 7. Echoes of trade wars past. The market's reaction to Trump's tariffs wasn't just about the immediate impact on corporate profits or global trade flows. It was about something deeper, something more primal: the fear of the unknown. Trade wars by their very nature are unpredictable and often counterproductive. They evoke images of the Great Depression when protectionist policies deepened the global economic crisis. They remind us that tariffs, while seemingly simple in their intent, can have far-reaching and unintended consequences. Section 8. A waiting game. As the dust settles on this latest round of tariff madness, the market is left to grapple with the fallout. Analysts are busy revising their economic forecasts, trying to quantify the impact on corporate earnings and GDP growth. CEOs are scrambling to adjust their supply chains, bracing for higher costs and potential disruptions. But perhaps the most important question is, what happens next? Will Trump escalate the trade war further? Will China and the EU retaliate in kind, or will cooler heads prevail, leading to a negotiated settlement? Section 9, Conclusion. Uncertainty reigns. For now, uncertainty reigns supreme. The market, like a skittish animal, is reacting to every headline, every tweet, every rumor. Volatility, that unwelcome companion to market turmoil, is back with a vengeance. The only certainty is that the ride is likely to be bumpy, and the destination remains unclear. One thing is for sure, Trump's tariffs have injected a potent dose of uncertainty into the global economy. And in the world of finance, uncertainty is the enemy of confidence, and without confidence, markets tend to do what they do best: they fall.